Southeast Radio's Business Matters with Karl Fitzpatrick.
Southeast Radio.
Welcome back to Southeast Radio's Business Matters with me, Karl Fitzpatrick. Well, there's no doubt that the markets have had a tumultuous ride since the COVID-19 pandemic began, which is one of the reasons why now is the perfect time to consider financial planning. Joining me on the phone now to guide us through the importance of financial planning in a crisis is Georgina Roche from Neiland Financial Services. Georgina, perhaps you can start the interview by introducing us to Neiland Financial Services.
Morning, Karl. Thanks very much for having us. We're one of the largest financial brokerages in the Southeast in what we do. We've over 4,000 clients and we specialise in the areas of pre- and post-retirement planning, investments, business protection and family protection. And our, core values is our approach to financial planning is that we aim to build a long-term relationship with clients through employing 3 core values of integrity and trust, transparency and value for money.
And how have your own clients reacted to COVID-19?
Clients have been very reactive to the situation. We've been spending a lot of time, there's 7 of us in the office, all qualified financial advisors, and we've been spending a lot of time reaching out to clients, as well as clients phoning in just to gauge their reaction on how their pensions and investments are performing. I suppose people are concerned. They're turning on the 6-1 news and hearing about 30% drop in markets. So it's just about having that conversation with them and seeing are they comfortable with where they are in their current position and are there any adjustments we need to make to their financial plan.
And as you say, the financial markets have had a tough time over the last number of weeks. That seems to be tapering off at this stage. But what advice have you been providing to some of those existing clients about what they should do next? It
really depends, I suppose, on their goal for their savings. You know, if it's their pension, how close they are to retirement. If it's kids' education savings, you know, how close are they to needing that money to send their child to college? So 2 things you really have to look at with pensions and investments is your goal for that investment and how close you are to reaching that goal. So if you are close to that goal, there may be adjustments that you need to make in your investment strategy. You might need to de-risk or move into safer asset classes. If you are further out, particularly if you're contributing on a monthly basis, you can probably stay where you are for the moment anyway. Because as you said, markets did drop. They dropped quite rapidly, but there has been some recovery since. From the peak of the market was the 20th of February, and it dropped 30%. But we have seen some recovery since. As I say, the MSCI World Index is down 14% on year to date. So there has been some movement back up.
And are many of your own clients cashing in lump sum investments?
We haven't seen as much of that yet. I think with the financial stimulus that the government and has been providing and the insurance industry with the payment breaks and borrowings and things, that people are holding steady for the minute. I think people realise that this could go on longer than the 12-week stimulus package the government have offered. So people are trying to see how that will sustain them before they actually start to dip into their own savings and contingency plans.
Now, quite often in a financial crisis, people look to cash in early on their pensions. Are you seeing much of this happening?
We're seeing a little bit of it happening, particularly for business owners who feel that their business won't, I suppose, survive the impact of COVID-19. They're worried about their own financial situation, so they're looking at their pension. Is it possible to access it? And if they do access it, what impact that will have on their financial plan going forward?
And when somebody engages with Neiland Financial Services for the very first time around financial planning, what process do you bring them through?
We have 6 steps when we're initiating a financial plan for our client. So the first thing you do is what's known as the fact-finding process, where we look at your job, your family situation, your current financial commitments to get a clear starting point of where you are. We then look at your objectives. So what are your priorities? What do you need to address now? What can you address in 2 years' time or 3 years' time? And then we look at your attitude to risk. So it's your risk-reward relationship with money when you're talking about pensions and investments, which is hugely important. So what risk are you willing to take and what reward do you expect for that level of risk? We then go away, we look at all the information we've gathered. We put together a recommendation. We try to make sure that it's a sustainable and adaptable financial plan. We go to that with our clients. We then give them a little bit of breathing space to digest the information. Our goal is to empower our clients to make informed decisions for their own finances. We're just there to guide and provide the advice where needed. And once clients come back to us, then we will research the market for them to ascertain the best insurance company for them or the best financial product for their need and make sure that they get a competitive charging structure. It doesn't just stop there. So when it's all been implemented and done, we'll keep in touch with clients because, as I said, you won't be able to address every financial need now. There could be something in 2 or 3 years that you might need to address, but as well as that, your circumstances change over time. So you will need to review your financial plan as your circumstances change.
And in terms of people's appetite to risk itself, how would you describe that here in the Southeast?
My experience is that the financial crash of 2008 and 2009 is still very fresh in people's minds. So people are wary of risk, but they also realise that holding money on deposit over the longer period, they're actually losing out. Cash is one of the only assets that's returned a negative year on year for the last number of years. And volatility is actually a function of an efficient market. So you are going to experience ups and downs regardless of what level of risk you take when you're looking at pensions and investments. So I think people are cognizant of that, but people do realise that they do need to dip a toe into financial markets in order to earn a rate of interest and to at very least, beat inflation with their savings.
And Georgina, when it comes to investments, what time frame should people be considering before making any investments?
Investments are longer period or long-term financial vehicles. So we all have 3 savings needs: if you're short-term, your medium-term, and your long-term. So long-term is anything 5 years plus, and that's where your pension or any form of regular investment or lump sum investment should come into it. So if you're making an investment decision, you should be thinking long-term, 5 years plus.
And in terms of what has happened with COVID-19, people have become very vulnerable very quickly. How can financial planning help them alleviate those stresses?
So because of that feeling of vulnerability, it's their financial vulnerability. We're all now very much aware of the vulnerability of our health and very worried about family and friends. So financial planning at least can make sure that your family is protected. So your first port of call with financial planning should always be protect your income. So that's life cover, it's critical illness, it's income protection. If you have those policies in place, then you know if the worst of the worst happened to you, at least there's something there for your family to help them cope financially from the loss of your income. And then you look at your disposable income. So can I afford to save for the next 5+ years? And can I afford to save into a pension to sustain a standard of living in retirement?
Georgina, for people who are approaching retirement and may be concerned about the impact which COVID-19 may have on their pension, what advice do you have for them?
Reach out to your financial broker and have a really good chat with them over when you hope to retire, what type of retirement you're hoping for, review your current pot and how it's invested.
And in general, what impact could the COVID-19 crash have on the retirement planning process?
It might adjust people's attitude to risk, where they have seen such a sharp decline in markets. They might feel that they may need to look at de-risking. They might be happier to take the tax relief involved in retirement planning and not aim for too much interest. They might see it as an opportunity. Volatility in the market can be an opportunity for people saving on the regular because you're buying and at a cheaper price. So some people we're finding are actually increasing their pension contributions, are starting to look at investing, maybe not in lump sums, but investing monthly amounts to try and take advantage of those cheaper prices in the market at the minute.
The last crisis that we can compare this to really is the SARS crisis. Talk to us about what happened in the markets at the time and how long it took to recover.
So when SARS broke out in 2003, it took 9 months from market peak to the bottom point of the market drop. So from the peak to the trough, it took 9 months. But when they realised that the infection peak had occurred, it took 1 month only for the Asian markets to recover. And
is it true to say that markets will recover far faster than the economy?
Markets will show green shoots a lot faster than the economy because markets are global. They have a much further reach than, say, our local Irish economy. So going back over decades and decades of market fluctuations and of downturns, markets will always recover faster.
And in terms of life cover, critical illness and income protection policies, what should policyholders be doing right now?
The first protocol in any financial plan should be to protect your nearest and dearest, whether it's protecting a key employee, a co-director, or your family from the loss of income in the event of a death or an illness. I would encourage people before they make any changes to reach out to their financial broker and have a conversation with them. If they find that the contributions are no longer sustainable, there are other options available to them. They can reduce their cover. They can look at applying for a policy with lesser cover just to get them through. But the very worst thing they can do is cancel something without speaking to their financial broker.
And Georgina, from a tax and inheritance planning perspective, are there any advantages to be gained from tax planning in a crisis?
Absolutely. Tax planning is going to be hugely important. for everybody. So with inheritance and tax planning, you can use your pension, you can use your life cover, you can use investment savings to cover off those different areas. So if you do have existing investments or pensions, or if you have a family member that you're concerned is going to be left with an inheritance or a tax bill in the event of your death, you do need to sit down and look at those different financial vehicles and how they could be used to offset some of that liability.
And Georgina, finally, what are your top 3 tips for effective financial planning during COVID-19?
The first thing is to be as open and honest with your financial broker as possible. A financial broker, to give you the best possible advice, would need to have all aspects of your financial plan in front of them. So all your life cover, all your investments, all your pensions in front of them. So engage with them, be as open and honest with them as you possibly can about what your goals are and what your concerns are. With financial planning, what we aim to do is put in place, as I said, an adaptable plan for you going forward. So the number 1 tip would be to be as open and honest and engage as much as you can.
Well, if you've just tuned in, that was Georgina Roche from Neiland Financial Services, and I would like to thank Georgina for providing us with a comprehensive review of current financial planning needs and implications.
Southeast Radio's Business Matters with Karl Fitzpatrick.